You also say in your notes, you can't run, you can't hide. Is this the only way to stay invested in this inflationary environment when we don't know that it's a fact that prices will actually fall?
Well, this is the wonder of being an investor, isn't it? Is you have to take the rough with the smooth. And if assets go down in general, as we saw last year, both bonds and equities went down, investors have to be invested. You know, that's your job. You're supposed to be there. And you also got to be careful of the whiplash, as we saw in the last quarter of last year. So, no, you can't run, you can't hide. You just have to design portfolios in a way that you think they're going to be robust and in a way that you think that they're likely to survive some of the things coming down the pipeline. I actually think at the moment you have to think outside the box because there's so much consensus thinking in the market at the moment that you're not going to get anywhere by following that particular line.
So if we're worried about inflation continuing to stay elevated, that could mean higher yields, higher US dollar as well?
Yeah, I think so. The thing is with inflation is now we're starting to say, oh, well, hold on, maybe it is a bit stubborn. It went up to 7%, 8%, 9%, and it's going to go down to 2%. There's no way it's going to go down to 2%. You know, we're seeing now, certainly in the service sectors, that inflation is in some areas out of control. It's not really being reflected in many of the official figures. You can see it's still in double figures in the UK, close to double figures in Europe, and still something like 7% in the US. Of course it may go down to 5%, but if you look at that over the last few years, you know, 5% compared to the 2% we had over the last 2 years, there's an awful lot of space under that curve. So that has to be built into markets sooner or later. So yes, that's why I'm bearish.
Richard, are you bearish for geopolitical reasons as well? Of course, we saw, I guess, a reminder that even if we do manage to get kind of competitive guardrails in the US-China relationship on some of these sensitive matters like data security, we saw early this week the reporting about Chinese SOEs being told to dump these big four accounting firms. Does that weigh on the ability to have the visuals to be able to invest into China?
Well, I think in general terms, if you're looking at the guardrails, I think that's likely to happen. I don't think we're in such a serious situation. Yes, there's a lot of discussion between the US and China, but I don't think we're in the kind of situation that they're just going to turn their backs on each other. There are huge economic links. They won't go away. So I think guardrails will come into place, and I think both parties are treading around each other. In terms of investing into China, yes, it's going to be more difficult. The Chinese themselves have now got quite a close control over their economy, about as close. It's about as difficult to get into China as I can remember when I was a young lad in the 80s, for instance, when it was still quite difficult to get into China. That's going to be restrictive, I think, in the next year. Having said that, I think the Chinese economy domestically will do well. There's plenty of COVID revenge spending to come through, and tactically, China is still a very interesting place to be.
At the same time, you know, we're all still grappling with the fallout from Adani and Hindenburg, right? Hong Kong is now looking at what's going on with Tektronic. Are you seeing that we're entering a new type of volatility, potentially with more of these short seller attacks?
Well, I think short seller attacks have always been around. They're likely to be more intense if the market's fragile because, of course, if you go for a company that maybe does have relatively weak fundamentals, you're probably going to have quite a bit of luck because the market's looking really at a risk-on basis. So I think tactically, if you look at what happened with Adani, the stock had gone up enormously. It was ripe for a fall, and people are looking at these opportunities all over the world in order to take advantage of them. And it's easier to take advantage of them in an uncertain market than in a bull market. So I think, yes, we are likely to see more of those, but only because the environment is more, if you like, applicable, more adaptable to that sort of thing happening.